Good afternoon this Tuesday, March 28th. The biggest crop report of the year is on the way this Friday, March 31st at 11 a.m. It's our spring stocks and early planting intentions report, with June 30th being the D-Day for what they really believe we planted. So let's get a look at what the expectations are. Rolling into Friday, average estimates coming in pretty close with what the February outlook came in at 91 million acres. We've got some wild ones out there that are not included in this average. FBN, which only had 801 respondents, so they're not giving it a lot of credence. They're not even adding it in here. They were at 92.5. Soybeans, 87.5 was the average guess at the February outlook. Of course, that's on par with last year. But the average guess coming in about 700,000 acres above the early February Farm Forum guess. FBM was something like 84.5. Market didn't even put it into the Reuters estimate. It was so outlandish, or should I say outlier is the word. We'll see. They may be right regionally where they're at, but whether it actually fits into the mold, we'll see. That certainly would create quite the upset if that number was true. Then that means this corn number must be 94 million acres. All wheat coming in 48.85. Remember back in January, the USDA or the February outlook was 49.5 with that big January uptick for total acreage. Spring wheat, just under 11 million acres, and that's pretty much on par with last year, just a slight uptick. Durham, as you can see here, pretty much unchanged, about 34,000 acres there. But the winter wheat crop, 36.25. That is consistent with the January number that they put out, 36.95 almost here. Some abandonments involved in this, but otherwise, last year we're still over 3 million acres higher, which with that drought manifesting in Kansas makes you wonder how many acres are going to be abandoned to affect this number. Cotton, 10.9 was the guess back in the February outlook, 11.21. Everybody's been upping that number here a bit as of late. For stocks, nothing really expected to be a surprise. We're depleting every month. We're down to 7.47, lower than last year by 300 million acres. But as we deplete these numbers away, soybean number could probably get down to 200 million when we're all done. But we're below last year here already by 190 million. Argentina is probably going to cause us to have some more business that we normally wouldn't have probably here in July. Wheat under last year, 934. Grain stocks, this obviously is all old crop. This has nothing to do with new crop. So we'll see what happens as we go forward. But going forward's tough. Look at this map. This is through Tuesday, April 4th. This is all snow. Obviously rain here, Indiana, Ohio, still catching the rain. Here's your snow in that same outlook that I showed for that precipitation. Just snow, but this is a bugger. Below zero overnight lows here in North Dakota, Minnesota, northern South Dakota. 9 to 15 below in some of these central areas. That's record for some of these areas for tonight. Apparently, we're not leaving our SUVs run all the time here. There's no global warming. We just can't warm it up. So this will start to become a problem here overall with the snowpack that we've got. This is kind of what our snowpack looks like, right where the below zero temperatures are. It seems like where there's no snowpack, it can be a little warmer. But come April 20th, the models that we're looking from April 20th forward, it's got to start showing an improvement. We do show this weekend up here in North Dakota touching near 40 degrees. Then it chills back out to the 20s and 30s. So this has got to break. Otherwise, spring wheat, we have the new crop contract on par now with old crop. And old crop, if we get any more further strength, there could easily see a 50-cent pop in present prices. So let's take a look at the action. Soybeans, absolute implosion last week, dropping 90 cents in 3.5 days. Then, of course, a V-bottom smoke right out of there. I think right about here when we heard the rumors of maybe Brazilian beans into the U.S., they bring that rumor around every time beans get too expensive and they use it. In the end, they don't really import them, or if they do, they got to blend them off heavily. Nonetheless, we had the top from last winter here. We had our wave 1 down. Wave 2 advance was quick. This is wave 3. I was thinking wave 3 would stay under the ledge here and start another. This would be 4th wave and then start another 5th wave down. But cash beans now with today's close back at $15 unless sales pick up on that. Here is our 6-hour chart. Really lets you see the market on a 6-hour ratio and see the actual trending here, which implies that these beans, as smart as they've been with this V-bottom, maybe they can still re-challenge the bottom of wave 1 here, which you really shouldn't overlap that by much. 1476, 1480 should stop this thing. And as you can see, this is a 6-hour moving average dropping fast in a couple of days. That'll be down to 1478. So quite impulsive V-bottom. Typically it's bullish, but then you get a lot of V-bottoms like this here that gets slapped. Here's another V-bottom, still declines. So V-bottoms are not always a guarantee. It's just volatility of soybeans. So one would venture to guess that if the bull market has been stalled for a considerable amount of time, well, 1478 to 1484 will likely be with spiking effects, the stall out here. See what the USDA says on Friday. Acreage, if that thing comes under 87 million acres, well, this is going to raise heck with Elliott wave copulations and imply something different here. November beans quite strong. The soybean meal broke just like the beans fell off the ledge. Their recovery could allow for 465 to probably this declining moving average to 470. That, of course, would imply probably another $10, $12 up yet if it wants to pull that off. Corn. Okay, the 200-day moving average was challenged today. In a simple world, we'd say that's the top of the ABC rally in wave 4, but it's not that simple. We have that crop report in front of us. Also, China's buying every day, up to 3 million metric tons already over the last 2 weeks. If we do a little measurement, you measure the first leg up, wave A, and you slide that over. This is where I come up with that 655. I've been saying 651 to 655 could be the top of C. 2 closes over 655 implies an extension, and then that'll take her back up to the 670 range, which would coincide with that former support, turn now resistance. But we are in a fourth wave recovery rally. The last couple of years, the highs have always been in late April, early May. We'll see how this year wants to play out, but we do have this market probably here in the next couple of weeks or so should start tailing off again because China's not going to buy every day. They're going to get their fill here ultimately. And they're the only ones buying. And we got to convince the world to want to buy U.S. corn if they can't get it out of Argentina and Brazil's not able to stock it all. New crop December corn, we have been thinking the 550 range would be some support for a while. I've been saying that since the beginning of the March, but boy, they sure challenged that. New low middle of the week last week. And now we're recovering, tied to the rally in the front. And of course, the weather, probably the last few days is what's kicking this. If you do the wave structure, you can see wave 1 is here. Then you've got a wave 2 recovery, and then you've got a wave 3 that measures actually to that new low because this last leg down, you can go 1, 2, extended 3, 4, 5. And now we're starting a new series rally here, an ABC, so to speak, and we could get an A wave rally possibly to the trend line moving average on the initial scare here, or maybe what the crop report says, get a B wave setback, and then a C wave spike seasonally, more probably, and this is not to scale for time, but something here that would play into the summer spikes that maybe would give us a chance to make some sales again at $6 where we had received a 25% sale. We've got on about something north of 605 on 25%. Wheat, Kansas City, here's our drought. We're today historically $1.70 over Chicago wheat as it's the spreads that are playing this thing out as world wheat values have bounced, but not exactly exploding. Russia's going to make sure of that. So we're playing the spreads, and the C-wave rally we still think could get Kansas to re-challenge the $9 value, kind of do a left shoulder head right scenario here, at least to challenge this resistance for the C-wave advance. Time-wise, our next 60-day cycle is the opening of May seasonally. Wheat can rally till the end of April, early May when it gets its spring rally. Notice our 60-day cycles. They're not perfect, but they're close. And this one came late, and then it finally rallied. So whether this potential high comes in early or comes in late, I don't know. I just know that we're in this range. We would anticipate a spring rally that could carry into that. Because right now, through April 11th, 15 days out, there is no rain in Kansas, in Texas Panhandle, Oklahoma, where they grow wheat. It's a problem. And so we'll see what Mother Nature wants to do for them. Minneapolis wheat recovered back today above its long-standing support. It fell through up against the 55-day moving average resistance. And if we can push through this, the hard wheat, we need spring wheat planted. And when you look at this daily continuation chart, that's the same price as new crop September spring wheat. So we can just look at the same chart. we should be able to get a push to this 55-day and take a run at the 245-day moving average. Why is that important? Well, take a look at how important the 250-day is. When it's bearish, it's bearish. When it's finally friendly, it's friendly. Once we fell under it again, granted there were some spikes on a day or two, but it stayed negative. So one could postulate, looking at this, that 945, 950 could be the target for old crop and September wheat to score on some new crop sales here as well as we play out, trying to maintain some acres of spring wheat, maybe get to 11.5 million acres of spring wheat to kind of offset some of the abandonment we're going to see down in Kansas. But again, it would be a bear market rally. Rallies would stay under previous cycle highs and retracements. Crude oil, we think we've got our seasonal low. We've been saying at Finian that by the time we get past March 15th to the 20th, we should start the seasonal rally. It is underway. Nice little fake out here last week, Thursday, Friday, on the banking concerns when everybody was basically locking up on wanting to have money risk on. Intraday, we had noted that something around the 72.5, 73 range would probably start to create resistance. Well, they pushed through it today. The Iraqi story is what took us from here to here, as Iraqi oil through their pipeline out of Kurdistan has been closed for quite a while. We don't know how long. But we'll see here. This area could probably start creating a reaction, another reaction back before it pushes again. But longer term, as the bull market is concerned, we are downtrending since March 7th, and we have to close above substantial resistance at the 82.5 range to say, hey, we got a runaway bull market going into the spring. Well, that's not the case as of yet. But we'll see. The Federal Reserve has a way of mucking things up and probably collapsing our U.S. dollar. And that U.S. dollar is not looking so good these days. A close under 102 would start setting out re-challenges of the low of the year, just under 101. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.